All right, guys, welcome back. This is Trade with Ola, and it's another episode. And today's video is based off a recommendation from one of my subscriber. And even before making this video, days before me making this video, I had a lot of people now start asking similar question in line with what the first person who demanded for a video like this asked. Now, the major topic we're going to be treating today is going to be how to mark out our proper key levels while trading. Okay, so I'm going to be showing you guys how to mark out your key levels using the weekly time frame, using the 4 hour time frame, and using the 2 hours time frame. Now, mind you, the type of key levels you're going to see me marking out right here are Malaysian SNR concept key levels. Okay, so if you've not watched or you don't understand anything about Malaysian SNR key level, I would advise you go watch previous videos I have on my channel. Okay, with that being said, let's just go straight to it. Now, while I'm explaining how I get my key levels and how I mark them, I'm definitely going to show you guys review and trade analysis and all. So this was the trade I caught yesterday, 1:8 on AUD USD. Okay, posted it on my TikTok story the before and after. So with that being said, let's just go straight to it. I'll also show you guys something very interesting that happened to me um, yesterday evening slash this morning. All right, so let's go straight to it. Now, when we talk about key levels, I've told you guys in previous videos the essential important needs of key levels. These key levels, we just use them as support and resistance levels to know when price react from one particular zone to another particular zone. Because whether you like it or not, this price doesn't move from this point to this point for no reason. No, it moves from point A to point B. Let's say this is our point A and this is point B. It moves from point A to point B because there was a key level price, okay, a specific level zone where that price was reacting from. Okay, that was why it moved from that level down to this level you're seeing here. And once it got to this level, it gave a reaction because this level was valid and then pushed itself to the upside. Okay, so we're going to look at first how to mark out key levels on the weekly. Now, for us who already know our Malaysian SNR concept, we're going to see ourselves marking essential levels with no stress. When I mean with no stress, I definitely mean with no stress. So one of the examples I'm going to be giving us here is going to be on GBP USD, and I'm also going to give us examples on BTC. All right. So now let's say this is our this is GBP USD weekly time frame. Okay, this is GBP USD weekly time frame. Now, if you notice something on my time frame alignment or how I structure my time frame, you notice that I always like to work with the weekly time frame to mark out my weekly key levels because the weekly key levels will give me the overall trend I should be on for a week or more than. Now, I believe for you to watch this type of video, we already understand the difference between a trend and the directional bias. The directional bias is for a short duration of time, while the trend is for a long duration of time. So I'm marking a key level on the weekly time frame to get my what long duration movement. Okay, my overall trend. Okay, now let's now see how that works. So first things first, as a beginner, I would always advise you just switch straight to your line chart. Focus on where your recent price action is and then just switch straight to your line chart. Okay, now when you switch straight to your line chart, I want you to start using your square tool. So for some beginners, you can start with horizontal line tool. Okay, you just mark out key levels. You can see that this is an A-shaped key level here. This is an A-shaped key level on the weekly time frame. Now, where did this price start buying from? This price started buying from this QM here. There was a QM here, there was a V-shaped key level, but I'll pick this QM and I'll show you why I pick this QM key level over this V-shaped key level. Okay, why? First, the QM is a fresh level, and I think this V-shaped key level, when I saw it, okay, it's also a fresh level, but you can see that price reacted from this QM precisely. Now you can see the precision of how Malaysian SNR helps us to get our what support and resistance. And I've told you guys before, the only concept or the only reason why you see me using Malaysian SNR is because it helps me to give precision to what my support and resistance levels or zones. And that's what the concept is all about. Now you can see that we have an A-shaped key level. So I'm looking for price to come back to this key level here. Okay. So whether you like it or not, if you don't understand Malaysian SNR, I don't think you can start marking out key levels. So you go back, watch previous videos in line with what Malaysian MSNR concept on my channel. Now, with that being said, I have marked out this level here. I also marked out this level here, which means for this week, I'm only going to continue to look for buys because the only key levels I have here around here right now is for this one here. Hold on, break retest. It's just this key level. So I'm looking to buy this market back to this key level here before any change of my overall trend might possibly happen. Okay, before any change of my overall trend might possibly happen. Okay, so now if I want to now make this look presentable on my charts, I prefer using zones instead of the lines. Okay, because I don't want to have too much lines on my chart because I use lines for my entries and all, depending on your perspective or how you want your chart to look like. For me, then I use a zone, and you see me do something like this. So I'm going to mark from, you can see that I'll mark from this first opening, this first candle. I mark from the closing of the first candle straight to the wick. That's how I mark my zone, and I'll extend it. And once I extend it, I'm going to use zone 1. So my zone 1 is used for marking the weekly time frame zones. So same thing goes here. You can see the first candle, from the body of the first candle, I'll mark there. Okay, I'll mark it this way, and then straight down to the wick. Then I'll extend. Okay, so that's how I mark my key levels. Okay, so don't get confused. This is how I actually mark my key levels. Now then I can remove these lines. Now I now have what? This QM here that price reacted from and then started a storyline, a bullish storyline. You can see that this is weekly rejecting what? Weekly. This is clearly weekly rejecting what? Weekly. Now, after price rejected off this level here, I can now scale to my 4-hour structure. Can you see how the 4-hour structure gives you the overall view of how the support and resistance levels are on your chart? You can see how clean it is. You don't need so much noise. No, you know that this was a support. Price is now pushing back to a resistance zone. But how do you now capitalize all this movement here? You can see that this price, I told you guys from the beginning, if you've watched previous videos of mine, price doesn't move in one direction. It's not clean. It is never clean. It moves from one key level to another key level, from one key price level to another key price level. You're not going to be the one to give price instruction on where to get to. No, but you should know that price move from one key level to another key level, and then you should capitalize on that. Very, very essential. So if you look at this here, the price movement here was not straightforward as it's always been explained to you, where you tell yourself that, oh, you have what? Higher highs, higher lows, higher highs, higher lows, higher highs, as simple, as clean as this. No, it doesn't work that way. Yes, we are having our higher highs and higher lows. That's why price has been buying to the upside. But you can see that at one point in time here, there was a series of what? Lower lows, lower highs. But you did not know, at this point in time, you would have said you are in a bearish trend. You might be correct, but you can see that price still maintained its weekly overall trend, which is the higher time frame overall trend. So after marking this now, I can now start marking out my key levels on my draw on liquidity concept. So I'm going to give you guys an example here. Let's focus on the recent price action here. Okay. So if you look at this here, I actually caught one trade on this sell move here. The others I took a loss, which I'll explain to you why and why key levels are very essential for you. Now I have now gotten to my intermediate time frame. This is the time frame. This is the time frame in between what my higher time frame and my entry time frames. So in this intermediate time frames now, which is the 4 hours, do you understand? The 4 hours and the 2 hours are my intermediate time frames. The 4 hours and 2 hours are my intermediate time frames. Now you're going to see me do what? I will start marking out my draw on liquidity concept. It's as simple as ABC. Draw liquidity concept tells you that whenever price takes out external range, the draw on liquidity concept tells you that whenever price takes out external range, price must pull back into an internal range before coming back to take another what? External range high. Okay, and that's what GBP USD is doing now. So now price took out external range here, then price starts to pull back. So you start to mark out key levels where price can easily react from and start pushing back to the upside to take out towards the external range liquidity. But first off, you need to know how did we know that price starts to react from here? We don't know. You can never know. Your own is to mark out key levels from the existing chart data, previous chart data on your left-hand side. Mark out key levels and mark those key levels to this zone and see when price gets to this key level, does price give you a reversal concept and push to the downside? That's how we take our trades. We wait and react based on what we are seeing on the chart or the price movement. So if you look at this here, this first reaction from here happened to be from what? A key level around here, but I didn't see any visible one here. So you can see that I didn't see any visible key level where price was reacting from. I had other key levels. So don't get confused. This is a key level here. I was expecting that price was going to come to this zone here and react. Let me mark that out for you. You can see that this is a V-shaped key level. You see how I mark out by V-shaped key level? I mark it like I'm marking out my order block. You're correct. So I drag it out. And you can see that price did not come to, price has not gotten to that zone. This move now might be the move that will get to this level here and react. So if price has not gotten to this zone, which level did price use to get to this zone? So you see me marking my intermediate time frame zones with a lighter shade black or gray. Now, if I don't see a key level where price is reacting from, what do? I step lower towards my 2-hour time frame. I step lower towards my 2 hours time frame. And once I step lower to my 2 hours time frame, I'll now start looking out for more key levels. Now, as a beginner, you might get confused. But if you've watched my video on key levels, understanding fresh and unfresh levels, you are good to go. So whenever you are getting confused, just switch to your line charts and mark out essential levels where price can react from. So I have one here. This was the level price reacted from. This was the level price reacted from. So I have this level here. So we have this one here. Let me see. Okay, no, it's not this one. Okay, yes, I've seen it. So this was the level price reacted from. So let me adjust this a little bit. That was the level price reacted from. Okay, which was what? This was a V-shaped key level that price broke, retested it many times, broke out of it. This was what this last move down here was what made this level back fresh. When you understand the concept of fresh and unfresh levels in Malaysian MSNR, so you can see that price came back. That you can see where price reacted from that zone here. This is it. So that was the key level that gave that pullback. Okay, that was the key level that created that reaction. Now, how do I confirm this reaction? I just confirm that reaction using my reversal concept from where I scale down to my 30 minutes time frame. And once I scale down to my 30 minutes time frame, I'll wait for what? A reversal concept. What is that reversal concept? I just want to see what market structure shifts, right? Inducement, and then the closest PY. Now, if you don't see the structure shift, like you can see that this was a structure shift, but you don't see SLP concept clearly on your 30 minutes, you can scale to your 15 minutes time frame. You can scale down to your 15 minutes time frame. Some people even scale down to 5 minutes. Of recent, I used 5 minutes for some certain entries because price has been so choppy, especially on XAUSD. So something like this here, you can see this. We had the market structure shift, we had the inducement, and price came back to what? Our order block. That this trade setup is very, very clear on what? On the 5 minutes time frame. So you can see break of structure, price came back to the inducement. So this is your inducement. Every move here, this is multiple candle inducement. So you can see sweep of liquidity, break structure, another break of structure, multiple break of structures. Price, this is our inducement, and then price came back to what? The POI here. This is our entry zone here. And that's how you have taken your first sell. So I didn't take this setup due to certain criteria which I use as extra confidence for myself. Okay, but if you're just trading simple SFP straight up, you'd have taken this setup immediately. Okay, for your first sell. So after that, you now ask yourself, this sell I'm taking, I know that it's a counter trade. Where is it heading to? Where possibly can this sell get to? That's where you start to look at, okay, I need to know where this price will sell down to. Now you come to your 4 hours back again and use the drawn liquidity concept I explained to you. price move to what? From out to external range liquidity, tap a key level, react from that key level, and pulls back into internal range. So those internal range liquidity that you can see visibly, I have this one here. I have this key level here. Okay, so I was looking at this key level here. Now, where I made a mistake where I took my last loss here was because I thought I had already checked my 2 hours time frame. I have rules when I'm checking out, marking out my key levels, essential key levels that price can react from. When I mark from the 4 hours, I always make sure I scale down to the 2 hours to also see if there's any key level before the 4-hour key level I have marked. And this was where I made my mistake. There was actually a key level here. This key level here. This key level was mitigated, became fresh again, pushed up again, and became fresh, and price came to react from it. Price came to react from it. Even if this key level, this 2 hours key level was a low probability key level, price reacted from it, and that's what price is using to buy back in line with the overall trend towards the external range liquidity. So you can see how the draw on liquidity concept helps you with your directional bias. So for 2 days, Monday and Tuesday, I kept on what? Selling. I kept selling. So I'm going to show you an example. So this was my trade. So the trade I took that I got a win from. How? Sweep of liquidity, a break of structure, multiple break of structure, inducement, price came back to the breaker block. A very clean one. You don't need to stress about it. I see this was a breaker block entry. Everything here was my inducement. I can indicate this to be my inducement. And this was when I took the sell that gave me my first win. Stop loss can be above here. I always use, yes, it was around that 15 minutes time frame. Yeah. And I'm targeting what? I was targeting to this point here, and that was why I made my mistake. Okay, because I did not see this key level on time. I didn't see that key level on time. Naturally, my target is supposed to be here. Okay, so if you look at this here also, this was supposed to be my last sell. But instead, I kept on selling. I kept on looking for sell opportunities, which was totally wrong. So when price got to this zone here, price gave us a reversal concept immediately. Sweep of liquidity, multiple break of structure, gave you the inducement. Let me show you guys clearly. Give you the inducement here. Give us the inducement here. And then what? Came back to what? Tap what? The order block zone. Came back to tap the order block zone. And then that was how price pushed on the buy. Stop loss below here. And that's how this buy happened. Giving you about what? A 1:6 plus. And you know your target. Your target is this drawn liquidity here. So high chances we keep on buying to take out what? The external range liquidity. So what do you see again? Sweep of liquidity, break of structure. This is another PY for another entry. So what I have here is what? I have a break of structure after the sweep of liquidity. First break, second break, multiple break has happened. This is my single candle inducement here, as you can see. Then I'm looking to enter from what? The other block here. So I like to use from this OCL here, for those of us who know. So you see me having my entries from here. Stop loss below here. About 60 pips. And then you're targeting what? The external range. That's if price gets there. So high chances we're waiting for price to come back again to this zone here, tap us in, and then take out this zone. Now we're targeting what? I can target back to this other zone here, this other 4-hour key level. So that is how to mark out your draw on liquidity concept and mark out a valid key level. So you notice something that I did frequently. I made sure that while I am marking out my key levels, I am using what? My intermediate time frames when I'm trading to get my directional bias. I'm marking with the what? 4 hours and the 2 hours. But if I want to get the overall trend, I just use only the weekly. Okay, and you can see that. You can see the weekly time frame just tells me that okay, we are in a what? In an uptrend. But to get trades opportunity, I have to use what? Draw on liquidity concept and mark out key levels in my intermediate time frame using what? 2 hours, the 4 hours, and the 2-hour time frame. That is how you mark out your key level, guys. So I hope this video has been so helpful. I want to make this video so short and very short as possible. I would have loved to give you one more example on BTC, but I think I have to pause it here, and I believe this video is quite helpful, or would be very helpful for those of us who asked their question, and I believe I've been able to answer your question. Okay, so thank you so much. See you guys in the next video.